Dear friends, today we are going to learn partnership accounts. In this unit, we are going to see the problems on basics and introduction to partnership. Whether you will get a problem based on this, yes, there are possibilities. But the marks from this chapter will not be 10 or 15, not like that. It will be 4 marks or 5 marks. Maximum, you may get problems from this at around 8 marks. That's all. But there is every possibility that you may get a problem from this also. As I told you, in partnership accounts, normally you get one full complete problem carrying 15-20 marks. At least 10 marks will be there. Problems and admission, retirement, death, like that. But there is every possibility that you get problems on this also. You know why? Because most of you would have definitely done problems based on admission, retirement, death and all. But you may slightly be a little bit lethargic about this. At that point of time, suddenly a question from this comes. You might be left, with some difficulty. So that's why I have chosen some 5 or 6 problems on basics and introduction also. We are going to do the problems one by one. Okay? Yes. Let's take the problem number 1. It's a very easy problem. In this problem, they're asking you to prepare the profit and loss appropriation account and the capital and current account of the partners. What is a P&L appropriation account? For that, you should know what is the meaning of appropriation. Appropriation is just distributing whatever is available. Whatever profit is available, that is distributed to the partners in various ways. For example, out of the profit earned in a certain year, a portion may be paid as salary to the partners. Another portion may be given as interest on capital to the partners. After that, a part of the profit may be taken to reserves for future purposes. Then the balance is known as a divisible profit that will be shared among the partners. And in the P&L appropriation account, you may have to account for the interest on drawings also. But friends, remember that the entries in the P&L appropriation account will arise only when it is agreed between the partners. That means number 1, there should be a partnership deed in writing. It has to be clearly mentioned in the deed that salary is payable, interest on capital is payable, interest on drawings is chargeable. And of course, the profit sharing ratio would also be given in the question. If the profit sharing ratio is not given or it is not evident from the agreement, we assume that they want to share the profit or losses equally. So all these items, what is the profit made for the particular year, what is the salary paid to the partners, what is the interest on capital allowed to them, the interest on drawings charged on their capital accounts, if any transferred reserve is there, and finally, how you are dividing the profit among the partners. All these will be exhibited in a profit and loss appropriation account. So this problem is based on that, number 1. Number 2. How to prepare the capital and current account of the partners. As you know, in partnership, the capital account of partners can be prepared under 2 different methods. One is called fixed capital method, other one is fluctuating capital method. Under fixed capital method, we have to prepare 2 accounts for each partner. One capital account, the other one current account. In this case, the capital account will not change repeatedly or frequently, because whatever is the capital contributed by them initially, that will continue to remain as it is. Whereas all other adjustments like salary, interest, drawings, interest on drawings, all these will be routed through the current account. So depending upon whichever method the partners have decided to follow, the choice is with the partners. They can decide to follow either fixed capital method or fluctuating capital method. If they follow fixed capital method, then 2 ledger accounts to be prepared: fixed capital account, current account. But if they decide to follow fluctuating capital method, only 1 account for each partner, capital account. All the adjustments relating to that partner, starting with the opening balance for that year, any additional capital introduced, any amount drawn by them, interest on capital allowed to them, interest on drawings charged on them, salary payable to them, and ultimately the share of profit or loss. Everything will be accounted in that 1 account called the partner's capital account. So whether we should follow fixed method or fluctuating method, that will be given in the question. If nothing is given in the question, they ask you to prepare capital account. That means you have to follow fluctuating capital method. You have to prepare capital account for each partner. Suppose sometime the problem tells you prepare the capital under fixed capital method, then you have to prepare capital account as well as current account for each partner. So the problem will tell you which method you have to follow. That's all. The problem is silent, you have to follow fluctuating capital method. That's all. See, even otherwise you can follow fixed method, but make an assumption, write a note that I am following this method. Nothing wrong about that. You understand? So based on these, whatever small inputs I have given you, we are going to solve this problem. Let's see the problem now. Raj and Shyam start business with the capital of 80,000 on 1st January 2020. Shyam is entitled to a salary of 700 per month. Interest is allowed on capital and charged on drawings at 8% per annum. Profits are to be distributed equally. During the year, Raj withdrew rupees 12,000 and Shyam withdrew rupees 15,000. That is a total drawing. The profit for the terms of the partnership deed came to 50,000 rupees for that year. Assuming the capitals to be fixed, prepare the P&L appropriation account and the capital and current account relating to the partners. So very simple problem. What is the profit for the year is given? What is the capital of partners is given? Only one partner is getting salary, that is 700 per month Shyam. Both the partners are entitled for interest on capital, and if any drawings, you have to charge 8% on that. All these are given. You are asked to prepare the P&L appropriation account and also the partner's capital account, assuming to be fixed. That means you have to prepare capital account of every partner, current account of every partner. Let us see how to do this solution to the problem in the Excel sheet. Friends, now we will see the solution to problem number 1 on basics and introduction to partnership accounts. We have already read the question. I explained what are the possible adjustments in question number 1. So what are we supposed to do? We have to prepare number 1, profit and loss appropriation account, and number 2, we have to prepare the capital accounts of the partners assuming it is fixed. That means we have to prepare 3 ledger accounts. Number 1, profit and loss appropriation account. Number 2, partners capital account. Number 3, partners current account. So let us start with that. So what is the first one? P&L appropriation account. See, this appropriation account is prepared after you have determined the profit for the year. So first you will prepare trading account, you will get gross profit. The gross profit will be transferred to P&L account. Then you will record all the expense and income. You will get the net profit. The net profit will be transferred to this account called P&L appropriation account. So therefore, from where will you get the profit for the year? From the P&L account. So from the P&L account, you have to transfer the net profit to the P&L appropriation account. So therefore, you put by net profit from the P&L account. What is the profit for the year as given in the problem? It is 50,000 rupees for the year ending 31/12/2020. Now in this account, we are going to show how this profit is distributed to the partners after providing for salary, interest on capital, interest on drawing, etc. Is it not? We are also asked to prepare the partner's capital account and current account. So since they follow fixed capital method, you have to show partner's capital account, start with the opening balance. Now, what is the opening balance? You know there are 2 partners, Raj and Shyam. The problem tells you Raj and Shyam start business with a capital of 80,000. That means the total capital is 80,000. What is Raj's capital? What is Shyam's capital? Not given in the question. So what we should do? Sometimes they tell you clearly, Raj capital is 60,000, Shyam capital 20, like that. But here nothing given. They simply said the partner started business capital of 80,000. And as you read the problem, you will find that profits to be distributed equally. Since they have decided to share the profits equally, it is logical to assume that they would have contributed capital also equally. Therefore, if the capital is 80,000 rupees, Raj's capital will be 40,000, Shyam's capital will be 40,000. Total capital is 80. Since they are sharing the profits equally, we are assuming that they contributed capital also equally. So therefore, on the opening date, what is the balance of partners' capital? On 1/1/2020, the capital of Raj is 40,000 and Shyam is also 40,000. Is there any balance in the current account? See, there won't be any balance now because this is the first year. Suppose it is already a going concern, you may have a balance in current account. But this is the first year, therefore there won't be any opening balance in current account. Okay? So they contributed each 40,000, we start from there. Then whatever adjustments are given in the problem we have to do. For example, they say Shyam is entitled to a salary of 700 per month. This salary will be debited to the P&L appropriation account and credited to the partner's capital account because it's salary payable to the partner, not to an employee, provided profits are available. Whether profits are available, yes, 50,000 rupees profit is available, we can easily pay salary to the partner. That is absolutely no problem. So therefore, record in the capital account by P&L appropriation account. First, salary to Shyam, how much? 8,400. 700 into 12, 8,400 salary to Shyam. So, on the other side, we have to debit the P&L appropriation account to partner salary, how much? To Shyam, it is 8,400. 700 into 12. Number 1 over. Next. Interest on capital to be allowed and interest on drawing to be charged at 8% per annum. So interest on capital also should be paid out of the profits. So what is the entry for that? We have to debit P&L appropriation account as to interest on capital. How much will be paid to Raj? 8% on 40,000, that is 3,200. Similarly for Shyam, 40,000 at 8%, that is 3,200. And since they follow the fixed capital method, we have to take it to the current account. Since we are preparing the partner's capital account in a fixed capital method, we have to transfer this interest on capital to current account of the partners. So we have to put by P&L appropriation, interest on capital, 3,200 to Raj, 3,200 to Shyam. So that is done. Now friends, in this problem they are given, Raj and Shyam have withdrawn some money. So that has to be debited to the current account. So to bank or cash drawings, Raj has drawn 12,000, Shyam has drawn 15,000. And the problem tells you that you have to charge interest on drawings at 8% per annum. So it is an expenditure to the partners and income to the firm. Therefore, we have to debit the partner's current account with to interest on drawings. How much is that? We have to calculate and put it. Now, let's find out what is the interest on drawing. So, in the P&L appropriation account, you put by interest on drawing. How much Raj has withdrawn? He has withdrawn 12,000 rupees. Rate is 8%. But you have to multiply 6 by 12. Why multiplying 6 by 12? See, the date of drawings not given in the problem. Therefore, we should apply the average rate. Suppose date is given, we can calculate interest according to the number of months the money was drawn. But here, the date of drawing is not given. So we take it on an average for a period of 6 months. Hence, the interest on drawings for Raj will be 12,000 into 8% into 6 by 12. That comes to 480. Similarly, for Shyam also, the date of drawing is not given. So 15,000 into 8% into 6 by 12, that will be 600 to be charged to Mr. Shyam. So we are crediting the P&L appropriation account. The corresponding debit should go to the current account of the partners. So in the partners account, you put to interest on drawing for Raj 480, for Shyam 600. So that is also done. And you have to put it as debit current account to P&L appropriation account. So now that all the adjustments we have done, now what we should do? We have to find what is a divisible profit. The profit that has to be distributed to the partners in their profit sharing proportion. In the problem, it is given they share the profits equally. So first let us find out what is the profit. Find the total of credit, that is 51,008. The difference between the credits and debits in this problem is 36,280. That is the total profit for the year, which is to be shared by the partners Raj and Shyam equally. So therefore, how much will go to Raj? To partners capital or current account, Raj will get 18,140, Shyam will get 18,140. Total profit is 36,280. Half of that will go to Raj, half of that will go to Shyam. So with this, we have closed the P&L appropriation account. We have determined the profit made by the firm during the year. In that, the share of profit due to the partners have been determined, which should be transferred to the capital or the current account of the partners. So go to the current account, there you put share of profit for Raj 18,140, Shyam 18,140. Now all the entries are made in the capital and current account. The capital account, there is only the opening balance. No further addition of capital, no drawings of capital. Therefore, this will remain the same. 40,000 brought in by them initially will continue to be same 40,000 at the end of the year also. Therefore, what is the closing balance of Raj and Shyam capital account? Same 40,000, which will be the balance for the next year. That's the reason why we call this as fixed capital method. See, initially they brought 40,000, no change, capital remains the same. Therefore, the closing balance is also 40, which will be the opening balance for the next year. So 40,000 for Raj, 40,000 for Shyam. Now, we have to find what is the balance in the current account of the partners. Find the total. The case of Raj, 21,340 is the total. So what is the closing balance? 8,860 is the closing balance in Raj current account. So put it as 2 balance carried down. And in the case of Shyam, the total is 29,740. Put it on the debit side also. Find the difference. That will be the closing balance of the current account of Shyam's current account. So therefore, the current account balance of Raj is 8,860. Shyam is 14,140. That will be taken to next year. So what is the balance next year? You put it as by balance brought down. 8,860 for Mr. Raj, 14,140 for Mr. Shyam. So friends, in this problem, we have prepared the P&L appropriation account where we have accounted for partner salary, interest on capital and interest on drawings. And finally, we determine what is the divisible profit which is transferred to the partner's capital in their profit sharing proportion that is equal. And we have also prepared the capital account of the partners based on fixed capital method. So we have to prepare 2 accounts, partner's capital, partner's current account. Capital account being fixed, no change. Opening, closing is same number, which will be opening for next year also. We put all the other entries in the current account, salary, interest on capital, share of profit, drawings made by them, interest on drawing. So ultimately, we found what is the closing balance of the partner's current account, which will be the opening balance of the current account of the partners. Easy problem. They may give you 4 to 5 marks or maximum 6 marks can be given because they're asking you to prepare 3 ledger accounts, P&L appropriation, capital account, current account. Probably they may give 4 to 6 marks. So on average, you can expect around 5 marks for problems like this in the exam. But as I keep telling you, we should try to finish it off in a maximum of 10 minutes. There is not much complexity or not much difficulty was there in this problem. If you are clear and thorough about the journal entries for salary, interest and so on, you could easily get the answer for this problem. Now we are going to try another problem on basics and introduction to partnership accounts. This is problem number 2. Peter and Rahim are in partnership, sharing profits and losses in the ratio of 3:2. As Peter is suffering from ill health, he cannot work as hard as before. The chief clerk of the firm, Raman, is admitted as a partner with effect from 1st January 2020 and becomes entitled to 1/10 of the net profits and nothing else, the mutual ratio between Peter and Rahim remaining unaltered. So 2 partners were there, they are admitting a new partner. Why? Because one partner is getting old and is not able to work as hard as before. They are adding a new partner and he will be getting 1/10 of the profits in the future. He won't get anything else. But earlier, Mr. Raman was an employee in the firm. Before becoming a partner, Raman was getting a salary of 500 per month together with a commission of 5% on the net profits after deducting his salary and commission. That's what I told you. Before becoming a partner, Raman was an employee, chief clerk. His salary was 500 per month. He's also getting a commission of 5% on the profits after deducting his salary and commission. So from the profit, you have deduct his salary, you have deduct his commission. After deducting that, on that profit, Mr. Raman was entitled to a commission of 5%. Okay? But now once he becomes a partner, he will be getting only 1/10 of the profit. He won't get anything else. That is the agreement. It is provided in the partnership deed that the share of Raman's profit as a partner in excess of the amount to which he would have been entitled if he had continued as the chief clerk should be taken out of Peter's share of profit. See, they are trying to tell you, if Raman had continued as a clerk, what he would have got? Calculate that. By joining the firm, what he is getting? Calculate that as a partner. Suppose he is getting more amount of profit as a partner, that excess payable to Raman should be taken from Peter's share of profit. Because why are you admitting Raman? Peter is not good. Peter is not doing well. He is suffering ill health. So in order to compensate that only, we are adding Raman into the firm. So therefore, Peter says, suppose we have to pay him more money than what we would have paid to him as an employee, you can take it from my share. That is the agreement. It is provided in the partnership deed that the share of Raman's profits as a partner in excess of the amount to which he would have been entitled. Had he continued in the firm as an employee, for example, he would have got 10,000 rupees, for example. But by joining the firm as a partner, he is going to get 12,000 rupees. The excess 2,000 you are going to pay him. Who will bear that excess? Rahim will not bear. Peter says, I will bear. You take it from my share of profit. Okay, it's a very good problem. They may give you 6 marks also because slight complexity is there. Calculation complexities are there. If you understand, it is easy. Otherwise, you may find it slightly difficult to solve problems like this. So be careful. The profit for the year ended December 31, 2020 is rupees 1,40,000. Show the distribution of profit amongst the partners. So it's a very simple problem to the extent that total profit of 1,40,000 is there. How much should be given to Peter? How much to Rahim? How much to Raman? That's all. But earlier Raman was an employee. He was getting salary and commission. But by admitting him as a partner, he may get more. Suppose he is getting more as a share of profit, it has to be borne by the partner Peter only, not by the other partner. That is the objective in this problem. Based on this information, we are going to solve this problem. How to solve this problem? Let's go to the Excel sheet now. Yes, friends, let us see how to solve problem number 2. As I told you in the question, small complexities are there. It's just a calculation problem. Accounting, absolutely simple. We are asked to show how the profits are distributed. For that purpose, we have to open P&L appropriation account and we have to start with the profit for the year. That's all. So what is the profit for the year given in the problem? That is a starting point. It is given as 1,40,000. So that is a starting point. Okay. So what are we supposed to do? This 1,40,000 should be distributed to the partners. What is given in the problem? Earlier, Mr. Raman was working as an employee of the firm. He was getting salary as well as commission. But once he becomes a partner in the firm, he will be entitled to only 1/10 of the profits. Not more than that, nothing else. But had he continued as an employee, he would have got a lesser amount. Suppose he is getting some excess amount by becoming a partner, that excess which Raman will get should be taken out of Peter's share of profit. That is a question. Now therefore, friends, we have to find out what is the amount payable to Ram and what is the excess which you have to take from Peter's share. That's all. When you do this, then the problem becomes very, very simple. So therefore, friends, this problem is basically a working note problem. What is a working note number 1? We are going to find out what is the amount due to Raman. That's what we are going to find out. Earlier, Raman was an employee. He was getting a salary of 500 per month. That means he would have got a salary of 6,000 per annum. Then he would also get a commission. But how much will be the commission he will get? If the total profit is 1,40,000, after deducting his salary and the commission, whatever the profit, on that he will get 5% as his commission. What is a salary? We know. But what is a commission? Commission is after deducting the commission, you have to apply 5% of the profit. So therefore, with whatever profit that is available before charging commission, we should apply 5 by 105. On the profit before charging commission, apply 5 by 105. You will get the commission payable to Mr. Raman. So, what is the profit available? 1,40,000. Deduct salary. Commission we are going to calculate. But after charging commission, whatever profit on that only 5%. So, we got the profit before charging commission. So, from 140 deduct salary, that is profit before commission, multiply 5 by 105, you will get the commission payable to Mr. Raman, which comes to 6,381. Therefore, how much Raman would have got by being an employee? How much he would have got? He would have got 12,381 approximately. You can take it as 12,380 also, not a problem. Approximately 12,381. But now he's a partner. Once he becomes a partner, he's entitled to what? 1/10 of the net profit. What is 1/10 of the net profit? Which is 14,000 rupees. 140 into 1 14,000. So as a partner, Raman will get 14,000 rupees. You have to compare these two. Had he continued an employee, he would have got only 12,381. But by joining the firm as a partner, he is getting 14,000 rupees. He is getting some excess amount. So now the excess which is payable to Raman should be taken out of Peter's share. What is the excess? 14,000 minus 12,381. So this excess payable to Raman will be taken from Peter's share, 1,619. So Raman will get 14,000 no doubt, but whatever Peter is entitled, from that you have to deduct 1,619, he will get the balance only. Okay. So therefore, I am going to show you how the profits gets distributed between the partners in working note number 2. Calculation of profit share to partners. First, we will take Peter. How much is payable to Peter? 3/5, because the old ratio is 3:2, it is not changing given clearly. 3/5 of total profit is 1,40,000. Had Raman continued as a clerk, he would have paid salary and commission to the extent of 12,381. So deduct it. On that balance, Peter's share will be 3/5. So what is the amount? 3/5 of 1,40,000 minus 12,381. Peter will get 76,571 if Raman had continued as an employee. But Raman has become a partner. You are going to pay him more. Therefore, what you should do, the excess which you are going to pay to Raman will be taken from Peter's share. How much? That is 1,619 should be taken from Peter's, and therefore only the balance is payable to Peter. So Peter's profit share will be 74,952. That is A. What about Rahim? In case of Rahim, absolutely there is no problem. Whatever the profit, on that he will get 2/5. So 2/5 of 1,40,000 minus 12,381. So Rahim's share will be 51,048. Then what will be Raman's share? Raman's share is very simple. He will get 1/10 of 1,40,000, that is 14,000 rupees. So therefore, the total profit of 1,40,000 is distributed to the partners in this manner. To Peter, 74,952, to Rahim, 51,048, to Raman, 14,000. So this is how you distribute the profit to the partners. Now we are clear what is the amount payable to Raman as an employee, what is the amount he will get as a partner, excess taken from Peter. We have calculated what is the amount payable to Peter, what is the amount payable to Rahim, what is the amount payable to Raman. Everything is clear. We have to show this in the profit and loss appropriation account. See, already we have shown the total profit. So here what we should do? We have to show how much Peter gets, how much Rahim gets, and how much Raman gets. Calculation is already done. So simply we are copying down from the calculation. So Peter gets 74,952, Rahim gets 51,048, Raman gets 14,000. That's it. That is how the total profit of 1,40,000 is distributed among the partners. So what is the difficulty in this problem? The difficulty is calculating what is the excess amount you are paying to Raman, which is to be taken from Peter's share. If you calculate that correctly, then the problem becomes very easy. But many times we find that students make mistake in this calculation. That is why when problems like this come in the exam, they give you even 6 marks. It may not take more than 10 minutes if you know the answer how to do it. But if you are not able to do it correctly, it may take even 15 minutes. But the marks given is only 6. So it will not be worthwhile to keep doing the problems in the exam beyond a certain point. So as I keep telling you always, repeatedly I tell you, you have to practice these kind of problems. It will be easy for you when you go to the exam. So friends, I am sure that you are able to understand the solution. I hope you will do well. With this, we come to the end of this session. About the other chapters, we'll see in the upcoming sessions.